Ladies and gentlemen, thank you very much for joining us this afternoon. I'm still trying to get over the fact that we have to acknowledge the exit signs, but I've got to move on from that. I think it's a sign of age when you start harping on about something like that, maybe. Anyway, before we get into the annual report, part of what we do is, because we're an unlisted public company, annually we do a full audit report, but then half yearly we also get the auditors out to look at the books and analyse the financials. And Darren Tam is here today again. I'll get him to say a couple of key words about that audit process. Before he comes up, I like Darren. Darren, most times, Darren took over from Ian Jessup, and I remember Ian coming out there personally and doing the audit process. And when he first came out to see us, he's like, "Oh, who are these huckleberries? I'm going to come out there and do it myself," which was very kind of him. But we always wanted him to uncover anything that they felt that could improve the business. And Darren, we've asked him that too. And Darren's not backward in coming forward. I remember Darren coming to us a couple of years ago and he says, "Jamie, I'm just not feeling the vibe that I used to." And it's like a kick up the backside, you know. It was just like, oh, it's nice having those kind of people around you to give you the reality that you need at times. So thank you, Darren. Darren also audits self-managed super funds too with his firm too. So just a quick shout out for that.
Thank you, Jamie. So I don't know where to go with that. My name's Darren Tam. I'm a partner at a firm called Jessup's. Jessup's is an audit firm. Ian Jessup is actually in the room as somewhere here. There he is. So Ian Jessup used to be a partner at Jessup's. I bought him out, about, how long ago was it now? About 7 years ago. So he took the money that I gave him to buy his business and he's sitting here. So not going to say any more to that. As Jamie says, I've been working with Investor Central for approximately 7 years when I came and joined Jessup's. My background, I'm an auditor since the last century, just to make it seem like the 20 plus years that I've been an auditor. I'm really actually a very interesting guy, but I don't show it very often. So I used to work with KPMG. It used to be a well-known Big Four accounting firm. The Big Four are a little bit on the nose at the moment. I went out and we've become probably one of the very few boutique specialist audit firms in North Queensland. That's all we do, we audit. An audit is, how should we say this? You want comfort that the numbers that Jamie's presenting mean what they say on the paper, that you've got some assurance over what Jamie's telling you is true and fair. So we visit every 6 months. We do a half-year review, which is a looking at the numbers just to make sure that there's nothing in there that's not correct. Then we come back and do a full year's audit at the end of June. Been doing it for 7 years, and I guess let's put it simply: there's been nothing there that has caused me any concern as an auditor that I would be worried about if I was an investor in the room. So trust me on this one, as a car salesman would say. One of the things that I like, having worked with Jamie now for 7 years, is we've watched it grow. We've watched it grow from something that was exciting at the time. It's quite a simple business what Jamie runs. He gets money at a certain rate, which is why the investors in the room are here, and he lends it out to other people at a higher rate. And that makes everybody happy because you guys get your interest, and the people that struggle sometimes to get finance get loans. It's actually quite a simple business, but Jamie's probably acknowledged over the last few years that as it's grown in its size and in its complexity, he's had to bring along other people to help him with the business. He's got an independent board, so there's people on the board that are there to also give him a reality check. He's brought on a CEO in the last 18 months whose name is also Darren. Great name, by the way. So he's brought on people to help with running the business, and that's part of the reason that I'm comfortable on many of the things that we look at, because it shows sometimes people forget that they don't know everything, and by seeking outside assistance is always good, and Jamie's always been open to that, and that's probably one of the things that helps me sleep at night. So with that, I am passing back to Jamie. Thank you. I'm going to be here for the lunch, so come and see me if you've got any questions that you don't want to ask in the big forum. Is that all right?
Darren mentioned that he's not worried. I'm worried. I'm always worried. And when I say that, I'm worried about meeting my obligations. You grew up in a small country town like Townsville. It's our goal to be remembered for all the right reasons. So the way that we've structured the company is I'm particularly proud of. And ever since we had our first investor, we've realised our obligations to all of you. And it's through the way that we've structured our company that you rank first in preference to be paid. And I want to even talk about our team member prospectus today as well. But who are we? What do we do? For those new investors that are here today, Investor Central is an unlisted public company. And we own the brands of Finance One commercial loans and Finance One consumer loans. So how it started was us servicing an industry sector, providing loans predominantly for a second-hand motor vehicle. And we've looked after those customers. So I've been lending and collecting money now for 27 years. So successfully going out there in the early days and door knocking myself to be able to collect on those loans, and we've built this infrastructure over that period of time. And Darren mentioned that business has evolved. It's evolved to a national stage where we've got 2,700 finance brokers across Australia promoting our range of products. And we've also moved into commercial loans too. Same philosophy as consumer loans. So we do a lot of loans that are spread right across Australia in different demographics, and we service an industry sector that the large financiers don't. And we charge a little bit more. And that's why we're able to pass that on to our investor base, which is most important. But we've also got a brand of strategic collections and commercial credit control. Commercial credit control, it was established in 1996 and we bought it a couple of years ago. Just because we're good at collecting money for Finance One doesn't mean that we know everything about the collections industry. And whilst we've had that company for the last couple of years, we've taken a very cautious approach to growing that company. Great by Choice, a book by Jim Collins, it talks about bullets before cannonballs. Before you release a cannonball, you want to shoot off a couple of bullets and make sure that you really understand that industry sector. And we're gaining more opportunities are coming our way. We say no to so many opportunities, and we're selecting a few that we can trial. So we're very cautious about that, but we are optimistic about that. Why? Because it's right within our circle of competence of lending and collecting money. So it's about servicing an industry sector, all of those customers that aren't getting serviced by others. And it's how you deal with those customers. So it's the same thing for when I was going out there and door knocking. The last thing you want to do is talk about the debt. It's always customer centric. It's always, how can I help? How can I assist you? And we've been through some challenging times. We came through COVID, but in an inflationary environment that we've come through in the last 18 months, there's been some challenges. And I'm going to talk about that today because a lot of people ask us about, how are you guys going? You know, how's the loan book performance? What do you think of the economy? I was talking before, but there's two types of economists, those that don't know and those that don't know that they don't know. So, they're saying interest rates are going to come down, interest rates are going to go up, interest rates are going to stay steady. We just don't know where that will go. But what we do know is what we can control is whom we give a loan to and whom we buy debt from as well. So we're very selective on that, and we've built a credit matrix that analyses a customer that we want to do business with. So we set people up for success. That's the key to our business, and it's how we work with them. We've invested in growth. When it comes to growth, we've expanded the team. We've looked for team members outside of Townsville and within Townsville to be able to help grow our organisation. Darren Tam, the auditor, mentioned before, it's really important that you can analyse what you're good at right across all of our team, but what you need within your organisation. And that's why Darren has come and joined our organisation, not Darren Tam, Darren Cantor, our CEO. So I want to be very specific about that. And he's been really good. He's been tested a few times. So when I say that, not everything's just rosy. If you're in business, you have challenges all the time. But it's how you meet those challenges and how you rise to the occasion. And during the last, say, 12 to 18 months, it's really interesting. I used to call our demographic, our core demographic, where we first started from, was that lower socioeconomic group that we did a $15,000 to $20,000 motor vehicle for. I used to say that was recession-proof. And it still is to a certain extent, because those customers, they just get by. They really value that motor vehicle, and they make their payments. They may be late at times, but we work with them and they still go. What's interesting over the last 6 to 12 months is through that inflationary event, they're the ones that are really hurt, which has surprised us to a certain extent. Doesn't change anything. We still work with those customers, but we've actually refined our lending policies to tighten up that particular industry sector. So like we did with COVID, where we didn't stop our lending, but during COVID, we completely stopped our lending while we ascertained that industry sector and which parts of the economy were going to go well. Same thing. We've tightened up, which has provided us more opportunity to free up capital to do other loans for customers that are up that credit curve too. So Darren will talk about this later on, but there's a whole market opportunity for us to continue that growth. But we're not centric just to that client base. We do commercial loans for mobile plant and equipment and those businesses that, if you've been in business, it's bloody tough to get money from the banks. Right? And we're not talking big ticket items. So we're not talking $1 million loans that can fall over. We've got over 20,000 active customers with a current loan spread right across Australia. So that's the key to our business model and so how we service those customers. Investing in growth is investing in people. I stand before you today and I'm so grateful for the opportunity that you've provided for me. I've got to pinch myself. In my wildest of dreams, I never thought we would create a company that we've done that's operating on a national stage and to the heights that we've got to. And we're only just getting started. So, and why has that happened? That's happened because great people have decided to invest with us over a long period of time. So it's our 14th year. Next year will be our 15th year. But it's my teammates. It's those guys put in the blood, sweat, and tears every day to make our company great. And I walk into that office and I just get such a rush to be a part of it. I just feel so grateful for so many people. It's just incredible to be a part of that organisation. Thank you very much, Fiona, and everybody that's part of our team. And we've got new people that are starting. Brad, who's coming in, he's relocating from, can I say Melbourne, but he's a Queensland boy, to come and work in our collections business. And then we've got Jason, who's joined our organisation. And, there's new people that are coming in with excitement and enthusiasm, not as much as the current team members, but we'll elevate you, it's okay. Yeah. Our investor group. We've got over 500 investors right across the country now investing with us. The truth, I'd have to be completely honest with you. We've got approximately about 478 investors. And then we've got some husbands on top of the 478 that have come along for the ride. So we've got to double the 478. But it's really the wives that have decided to invest. Thank you for your support. We really, really do appreciate it. The average investment is over $600,000 now, so that's increased. It's really important, though, as part of a balanced investment portfolio, is that our interest, it comes in every month. We've never missed an interest payment to investors. We've never missed a redemption date for when an investment comes to maturity. So we've never missed a beat, even through COVID. But it's really, really important that you have a balanced investment portfolio, not just with us. But I do need your support. And Darren will talk about the new business growth opportunities to continue our growth in the market. There's new areas that we're able to lend into. So we would like to grow our investor base over the next 12 months by about 50 to 60 people. So, and that only happens through your involvement and recommendations to us. It really is the best vehicle for us to find new investors. So I do value your support, and I ask for your continued support. Not to put in more money, keep a balanced portfolio, but if there's anybody that you know that may be interested in an investment in our company, we'd be delighted to meet them. Thank you. 27 years of success. So 14 years from when we first borrowed money off investors, and 15 years next year, so we'll have to have a party for Dita, which is very important. But we've built a credit matrix of ground roots, so not top down, ground roots of just helping people over that period of time. There we go. We have paid over $173 million to our investor group over the last 14 years. Incredible, incredible. And $21 million has been paid to investors over the last 6 months. We've expanded our footprint. So part of our business continuity plan, I've talked about this before, we just couldn't find enough team members in Townsville. So we've got a place out at 49 Dalrymple Road that we could have 150 team members there if we could find enough people. But it's also important that if a cyclone comes through, that we can still continue to operate and service our industry sector if there was an event like that in Townsville. And we've got a footprint now that's actually larger than our Townsville footprint in Brisbane office, and we're looking for a larger office there. And part of our collections business, as well as Finance One, is at the Gold Coast now too. And we're looking for a larger footprint there too, so we can expand that base. Right, I'd like to hand over to Darren Cantor. Darren's, like I said before, joined our organisation approximately 18 months ago and is the CEO. So come on up, Darren.
Where's this way?
Yeah, that one. Thank you. Cheers.
Good afternoon, all. Tough act to follow is following Jamie, but also who would have thought an auditor with a personality? I didn't think that was actually something that we had. So, but thank you, Darren, for your support today. He didn't even know he was talking, so he came up and did a comedy act. So well done, nicely done. I have the honour and privilege of sharing the results for the half year, and first and foremost, very proud of the results we've been able to deliver through what has been a challenging economic period for everyone, and our company's not immune to that. We've also made some really good investments in our growth as well, and we'll step through those today. If I can get that. So for those new to the company or new to Investor Central, I like this slide because it demonstrates what we do. We invest in good people. We have a great track record of really solid, long tenure inside our business. You know, the Townsville office, the people inside that office have been with the company almost since day dot, which is amazing. It's often for a lot of new people in Brisbane, of which we've now got circa 80 people in Brisbane, we owe a debt of gratitude to all the staff in Townsville who have allowed us the opportunity to actually grow the company, because it's been a long grind to get us to where we are today. So we're often reminding the people in Brisbane and Gold Coast that we have a great debt of gratitude to all the people who have helped build the company to where it is today. Financials, we need to make money to give back to the investors. It's an important part. Underpinned by strong values. For those who know Jamie, obviously he values his investors and the staff that work for us. When I first started, Jamie pulled me aside. I've said this before, and he grabbed me and said, "You do many things, but you do not let down the investors." And that is never too far away from me. And also investing in the infrastructure to grow the company. We've done the company's in a great position, but as Jamie alluded to, we're just getting started. So we're investing in growth, in scale, to take us to the next phase. And all that's governed and underpinned by strong governance, right? We want to make sure we're growing, but growing sensibly. So everything we do is essentially ring-fenced through a really strong compliance framework. As Darren said, supported by an independent board and a really strong executive management team with all these different skills now to make sure that what we're doing is not just going to make profit for today and to return back to investors, but that we're here for the long term. Bit about the lending. We had a great year. Despite it being tough, we had a really strong year. So you can see 22,000 applications processed for the half year. Of interest, though, you can see that the loans approved actually flatline, even ever so slightly decreased. And that is a sign that whilst the opportunities were presented to us, we maintain a very prudent approach to lend money to the right customers. As Jamie alluded to, it's tough out there. We are seeing our customers struggle. So whilst they're wanting to get finance, we've maintained a real discipline to ensure that we're lending the right money to the right client. But we still settled $125 million for the loans for the half, so it's still a really strong result. As Jamie said, we've got 23,000 active clients now. Our average loan sizes are roughly the same. You can see commercial there at 38,000. If we sit here in another 6 months' time or 12 months' time, I do expect that to grow, to increase. We're expanding some of the products that we lend to, and I'll touch on it a little bit later. Our loan book. I don't like this because we have to report the actual number at the end of December, which says 478 million, but we've now cracked the 500 million mark, so I'm really pleased by that. So that's our first hurdle, and we've got Sandra. I think I've seen Sandra here, our lovely head of people and culture, who's got a nice party to celebrate that key milestone, so we're all looking forward to that. But I thank you all for that, your help in getting us to that stage, and one of the many things that Jamie has given us a goal is we want to get that loan book to $1 billion, so we're modelling as to when we might actually have that, and that would be a nice party for everyone involved. This is a really important slide for us to demonstrate that what we're moving into. So historically, our business has been very much asset finance to what we'd say the subprime market, the non-conforming market, those customers who fall outside the main banks. And that's held us in very good stead. But that market is only so big. And as we've learned a bit more about what we can do and build up our capacity and our scale, we've moved into what we classify as near prime, and we've got the title of Finance One Plus. Okay, so it's just a better quality client. So it's not necessarily the customers that would go straight to the bank, but it's in between. It might just fall outside the bank, but they are generally much better quality clients, and that's opened up a whole new market for us. The market that sits inside there is significantly bigger than the traditional non-conforming market. It's important to note we're not abandoning the non-conforming market. That's the market we know really well. And it's a hard market to compete in because lending money to clients who necessarily are challenging, you've got to know your stuff really well. It's a lot easier to lend money on someone who's a prime customer whose likelihood of paying is a lot higher. So we know our subprime market really well. But the opportunity to move into the near prime space is really going to open up a tremendous growth opportunities for us there and put better quality clients on the book, and the repayment profile of those clients is going to look better. So that is going to look very different and take us next phase of growth. As Jamie mentioned, we've got 2,700 finance brokers. A lot of those brokers would be, their core business as well would be introducing deals into this near prime space. So it's a big opportunity for us. As I touched on before, despite the opportunities being presented to us, you can see there our approval rate has declined. That is a further evidence that it has been tough out there, right? So our customers, despite wanting loans, we've had to take a real prudent stance, and we did tighten up, quite a conscious decision to tighten up who we lend our money to ensure that there's no point growing the business and then having a problem down the track by not being able to collect that money. So that's a really important slide for us. We don't necessarily have a goal to have an approval rate of X or Y. It's just making sure we're always tinkering with it, depending on what we feel in the broader economy is actually doing. But I look at that side of view that we are prudently lending out money. That's a really important step for us. The arrears index, I'm often asked, how's things going? How's the actual book going? Well, the arrears index, as you can see there, it's held up really well for the last 12 months. It has. We've had a slight increase in the commercial line below the bottom there. And that's more broadly that we've broadened some of the products that we've lent to. So we're more cash flow lending, which attracts a really nice margin for us, but it's also a slightly more elevated risk profile. But by and large, our arrears has held up really well, considering it has been tough out there. You know, everyone's facing the same challenges with the economy, the inflation, and our customers, as Jamie said, they feel that the most. They have really felt that. And the fact that our team of dedicated collectors, and we really have grown our collections base to ensure that we lend the money and we get it back to ensure it goes back to our investors. This is the slide that we just introduced. It's a really important one. You can see in 2023, this shows that for every customer that we've put in the books on 2023, what is the arrears for those customers at that time? And you can see that 2023 is performing better than prior years. So 2021 and 22, as you can see there, has not performed well. So the money that we were lending out, that's the stuff that we've had trouble from getting back. Hence the tightening of our lending. So we've tightened up lending to ensure that we're stabilising those arrears. And as evidence there that 2023 has really positioned the company well for the future. So in regards to a lot of the questions I get about, is it holding up well, how your loss is going to go? Well, that index there tells us that moving forward, the portfolio is in a healthier position than it was last year and the year before. So that gives me great comfort that not only we're growing the portfolio, we're growing it with the right customers. Collections update. This is a really important part. We talked about Brad. Brad's our new head of collection. So many of you might not know that we've got about 201 staff, thank you, Sandra, across the group now, which is an amazing achievement. But about 1/3 of those staff are in a collections capacity, whether that's collecting money for Finance One or whether that's actually collecting for commercial credit card and strategic collection. So when you've got 1/3 of your staff in that discipline, it was really important we appointed a head of collections to drive that. So I'm so thrilled to have Brad join us. So welcome, Brad, and no pressure, but you've got a big opportunity ahead of you. But the interesting part about that business is you've got a bit of a mix. On one hand, you've got to drive down the arrears for Finance One, but also then grow the revenue for the strategic collections business. So it's a really good opportunity for us. And as Jamie said, we've been very, very prudent and disciplined to grow that strategic collections business in the right way. There is no shortage of opportunities for us to buy debt at the moment. We've got a lot of our competitors have had some various challenges, which is presenting opportunities for us, but also presenting opportunities to us to buy the right debt at the right price. And we're learning. We're not overdoing it. We're just dipping our toe in the water, buying smaller parcels of debt. And you can see there that we've actually got an opportunity of $21 million worth of debt that we can collect on. Okay, so that's our platform for the year ahead. And we've got some really good clients that we can bring on that is going to propel that business to be a really meaningful profit contributor to the group. The financials, the main part, all builds up to the financials. Have we made money? The answer is yes. We've had a really strong year. So you can see revenues up there towards almost 60 million for the half. And most importantly, pre-tax profit of 9.3 million. So I'm really thrilled with that result. And if I can, we've got a number of people in the business at the moment. Can everyone stand up who works for Finance One, please? Can everyone just stand up, please? I want to see how many we've actually got. I just want to thank you all, give me everyone a round of applause for their efforts in actually driving this result. And a special call out thank you to Marg, Bevan, Sharon, and also Sam for the work they've done today to produce a fantastic lunch and this event. We turn up at this event and everything just goes really well. We do it in Sydney, Melbourne and Brisbane as well. And I love being able to turn up and just everything works. So, but I always say not much, they don't need to do much, but I know there's a lot of stuff behind the scenes. So thank you so much for all your effort there. Thank you. Most importantly, one of the things I look at, and for those, as Jay mentioned, I've been with the company for 18 months. And I moved from Sydney to Brisbane, moved my family up. Big job, big risk, if you like. But one of the things I looked at and why I was so comfortable to do so was that equity position there. it should not be underestimated the discipline that Jamie has shown in reinvesting the company's profits for growth and to also protect you as investors. So that's not lost on me. I hope that's not lost on you. That's a discipline. I thank you, Jamie, for that, because what we're here to do is grow the company, but it's to have the backing of an owner who's backing us to deliver a return and to compound that return, to grow the company and reinvest it in, to ensure that you as investors are protected. I very much appreciate that. And you can see their return on equity of 26%. That's the one thing. So for those who don't know, Jamie's been swanning around in Canada recently, but he always makes sure that we're actually, he's back now, so the world's changed, but that's the one thing. It's making sure that we're investing in for growth and getting an actual return to ensure that he stays happy. If he stays happy, I stay happy, and therefore the staff stay happy. So, but it's a very solid result. We're really pleased with that result, considering the tough market that we've operated in. This slide here, it's about making sure that what we lend out, we get back. So this is the key slide that we've been keeping an eye on here. This is our provisions for doubtful debts and write-offs. As you can see, it has increased from the last time we updated. We did forecast that it would, because obviously we all understood that this year economically was going to be challenging. So despite it going up, we feel that it's been well maintained, and we're in a really good position to arrest that, and it's starting to flatten out that curve. And as I mentioned before, those arrears indexes that I'll talk about there, they are the precursor to this number here. So if our arrears are going down and our loans that we're writing are better, that will flow on to our losses reducing moving forward. So whilst it's gone up and we don't like that, we did foreshadow that to be the case, but moving forward we think that'll, we'll confidently say that we will see that go down. And that further supports the near-prime products that we do. Those customers are better quality customers. Their repayment profiles look a lot better, and that will drive down those losses. This is an important one for you as investors. It's basically, what protection do you have? How much protection, how much are we leaving to ensure that if there's a rainy day of some sorts, that you as investors are not impacted by any downturn. So that gap there is increasing. So that's loan book versus funds borrowed. So we're not having it ran thin, whereby if something was to go marginally wrong, there'd be an issue for the company. And as you can see, that gap is increasing, and that's one of our benchmarks. We want that to continue to grow, so you as investors are well protected. And this one's probably the one that we're particularly proud of. Over the next 6 years, we've got $709 million of money to be owed back from our customers. But you as investors, you can see we owe $398 million to investors. So that gap of circa $310 million is our buffer, and we're growing that year on year. So that's really important. And you can see there, for those who are new and not familiar with that slide, if we stress test our business at various write-off hurdles, we do that to basically make sure that if we are stressed, or as some major economic event, are you as investors protected? And what that shows is that protection is getting wider and wider each year, and it's something that we hold very dearly to ensure that you as investors, it's one thing for us to make profit, it's making sure that you get your returns back, as we've demonstrated for the last 14 years now. So that is a very pleasing slide for us. Despite it being tough, we've still strengthened that position. I'll pass back to Jamie now, but again, thank you on behalf of all the staff at Investor Central and Finance One for your ongoing support. I'm hoping that you're pleased with those results. We've got, as Jamie said, I shouldn't be lost that we really are starting. The amount of growth we've had in the staff, to have over 200 staff now across multiple locations, there is a huge opportunity for us to continue to drive that. And as we grow, we build greater strength. We've really invested in some really high quality people to support our existing staff. So it's a really exciting time, and I really appreciate your support and ongoing support. And as Jamie said, we welcome other people, new investors. And if you have any questions, please feel free to come and see me. Thank you very much.
Thanks, Darren, for that update. Really appreciate it. I've loved having Darren a part of the business. He's certainly taken a lot of pressure off me. Maybe I've just loaded him up with pressure, but that's okay. Why would you invest with Investor Central? We've got a long history of meeting our obligations. Darren touched on it before. We've reinvested the majority of the profits back into the company. We have over $50 million of retained earnings back into the company and equity. So right from the get-go, we continue to reinvest the majority of those profits and create a buffer there. So you as an investor rank in preference to be paid before ordinary shareholders. We own 100% of the company, so there's no shakedowns from other equity owners, or we're not listed on the stock market, all of those, there's no corporate raids, anything like that. We're a master of our own destiny, and we've ranked you in preference to be paid. What I'm really pleased with is all the directors, they're investors also. They've got their own capital invested in the business. I have over $5 million of my family's money, on top of the $50 million, in preference shares too. What's interesting though, is if you're a team member at Finance One, you can invest through a special employment offer. So you do get a higher return on your investment because you're involved in the business. But if you invest through that employment offer, you rank after investors. So all the investors get paid, so we're putting our own skin in the game, we're at the grindstone, and you get paid before our team members get paid through the employment offer. That's unique. Right? You've got to really believe in the company if you want to invest in it. And myself, with that capital invested, I'm putting another $500,000 in this month, and I'm putting another $500,000 in next month as well. I can't get enough in there because it's a great return. It's a monthly return, and we're in control of our own destiny as well. So not only do you rank ahead of ordinary shareholders, you get an opportunity to understand the business model that you invest in. You can put a small toe in the water as an investor, and then you can expand on that investment over time if you choose to. But through the regular financials updates, you can see transparency is the key to our success. We want you to understand the heartbeat of our business and exactly how we're performing. It's vital. We've changed some of our investment offers. So we used to have 3 bandwidths. We've just made it a little bit more simple. So from $25,000 through to $250,000 with different terms right through to 8.35%. But we've also introduced a 10.35 for the larger sums up to $1.5 million for the 36-month term. Some of the questions that we get asked is not only, tell me about the rears, how's it going to go? Profit's important. You don't go broke by making a profit. Right? So we've been profitable from our first year, and we've been able to grow those profits. The only year that we didn't grow our profits was COVID, when we completely stopped lending, and we still made a good sizable profit. Why are the terms changing? So that's some of the questions that we get asked. Well, why is 60 months lower than the 36-month mark? All the indicators are saying that interest rates may come down into the future. May. We just don't know. But what we don't want to do is lock in too much money at that larger interest rate offer if interest rates are going to come down again in the future. We do have a diversified funding model. So not only the investors that provide capital to the business, we now have institutional money that invests into our business, not through preference shares. This is important. So we do a trust, so a separate pool of loans. They do not have a lien over Investor Central. It's a separate pool of loans that they fund, right? And it's ring-fenced away. But we're able to raise cheaper capital into the future through that. So when Darren talks about the Finance One Plus product, we can then get cheaper funding in the future to expand that as well. Not to say that we'll ever walk away from investors. So you have been the mainstay of our business, and we want to continue to have that strength within our organisation. You really are a strength to our business model, and we are so grateful to have your support. So thank you, investors. I'm happy to answer any questions which you may have, if you've got any. I'm happy to hand over to Darren to answer any questions that you may have. All good? When am I going to write it? There's a really good book by Tony Fraser, if anybody wants to. It's a good read too. So I'm just going to replace a couple of names and probably just use yours. Yes?
Jamie, see you going to Brisbane and looking at the Gold Coast. Is there any other capital cities or other cities in Australia you're looking at?
So our lending footprint is right across Australia. We've got finance brokers that promote our range of products in every state and territory. So over 2,700 finance brokers. Our loan processing centres and also collection centres are in Townsville, where we originally started from, Brisbane and Gold Coast. We won't rule anything out, but if we go to another state, then it creates a complexity of getting there. Already, that's what Darren lives in Brisbane now. For me, if Darren hadn't have started, I probably would have had to move to Brisbane. I love Townsville. So we won't rule anything out, but it's not on the radar at this stage. Unless Darren changes his mind. I don't know. Wants to go back to Sydney. Yeah, good. Darren's wife's name's Sam. I'm really nice to Sam. I'm really nice to everybody, but I know where his bread's buttered. Yeah. Any other questions? All right, that's good. Quinn. Now, could you come up, please, for a sec? Would you mind? Quinn's had a haircut and he's looking good.
Only get 2 a year.
I don't want to embarrass Quinn, but Quinn is my brother to another mother. We're both the same age. I know he looks a lot older than I do. He does. But Quinn came and joined our organisation when we were only young, and certainly been a pillar of support for me personally and professionally. So we talk about people giving you a kick up the arse from time to time. Quinn's delivered plenty of those for me over that period of time, but he's been an absolute rock. Quinn is moving on for a short period of time. So Quinn's going to have a sabbatical. I like to say he's got up to 12 months to come back to our organisation. But it's time. So it's been 13 years? 13 years of being together. And
I've spent more time with you than my wife, just quite. Yeah.
If you're allowed to love a bloke, I love him. To sum it up, we catch up on a regular basis as a family as well. So not only as an organisation, but a family, to make sure that we can meet our obligations. If something happens to me, part of our obligations to you, we want all my family members to know. Two of the girls work fairly consistently in the collections team, but we have an education piece. And part of that education piece is that if there is a problem or you want somebody to trust, you go to Quinn. That means the world to me. And my wife, my kids, we all respect you immensely. We love you, and we are so grateful for the amount of effort that you've put into our organisation over the last 13 years. And I genuinely hope that it is only 12 months and you come back, and it's like a gap year, but he's having at 52. Possibly. Quinn's a closed book at times, so you go, oh, yeah. Thanks,
Jamie.
Thank you very much. I could cry. Any questions? So tea, coffee, dessert's going to be served shortly. In saying that, Quinn is a director of our company and is a CFO of our organisation. We do have a new CFO starting with our organisation, moving from Sydney. Lachlan is his name, very, very capable, and we look forward to welcoming him to our organisation as well. The business will keep evolving. As we grow, there'll be new team members that come and join, as well as the mix of existing team members. But we are passionate about meeting our obligations to all of you, and it never leaves me. Like I grilled Darren, we've got to be remembered for the right things. I don't care about growth if I can't meet my obligations to all of you. So that's the mainstay of our business. Thank you very much for your support. Really appreciate it.